This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending August 27, 2022. Our question this week is, what are the four basic asset types? The answer will be provided later in the video. This week the market ended lower. The Dow Jones Industrial Average decreased minus 3.03% on Friday and was down minus 4.22% for the week. The S&P 500 decreased minus 3.37% on Friday and was down minus 4.04% for the week. The Nasdaq decreased minus 3.94% on Friday and was down minus 4.44% for the week. Looking at the week, we can see that there were 9 down finishes versus 6 up finishes for the major indexes. On Monday, Tuesday, and Friday, all the major indexes finished down. On Wednesday and Thursday, they all finished up. The new unemployment claims were 243,000 versus 255,000 expected. President Biden canceled $10,000 in federal student loan debt. Fed Chairman Powell announced that the Fed would keep raising interest rates to attack inflation. Gold fell more than 1% after the chairman's speech. U.S. Treasury yields moved higher on Friday, and California is slated to ban the sale of new gas-powered cars by 2035. New unemployment claims, canceling student loan debt, the promise of higher interest rates by the Fed, gold falling more than 1%, U.S. Treasury yields rising, and California stating that it would ban gas-powered cars by 2035 are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down are virtually impossible because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day or even every week, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What are the 4 basic asset types? Even though from a business operation perspective, assets are generally thought to be a resource with economic value and include items like cash, inventory, equipment, vehicles, and so forth. However, from an individual wealth building perspective, there are only 4 basic asset types, and they are big businesses, real estate, commodities like oil, gold, silver, and paper assets like stocks and bonds. These 4 basic asset types can put money into your pocket. That is, provide you with positive cash flow. Big businesses, for example, generate lots of cash flow from the income they get from operations. Real estate that is rented or leased out provides cash flow. Commodities like oil, gold, and silver can be sold or leased for income, and that is for cash flow. Stocks can be sold. They also provide dividends, and they can generate cash flow through the sale of stock options. Bonds provide cash flow in the form of interest. A key to building wealth is to obtain assets that provide cash flow and use that cash flow to buy more cash flow producing assets. Do you have any of the 4 asset types? How about stocks? Do you know how to use stocks to generate positive cash flow? Or do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. If you ever want to learn how to get wealth and income through the stock market, you are going to have to teach yourself. You must RSI, that is, read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you absolutely nothing about the U.S. financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library for free or buy cheaply online. It is not difficult to learn how to be a passive investor, which is what most people should do. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go on a daily basis, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is the Southside trading watch list from the week ending August 27th, 2022. The strongest performer on the list this week and for the second week in a row was Invesco Diversified Commodity ETF, ticker symbol PDBC. It's in the second column. It increased 0.22% on Friday and was up 2.45% for the week. PDBC is an actively managed exchange traded fund that seeks to achieve its investment objective by investing in a combination of financial instruments that are economically linked to the world's most heavily traded commodities, like oil, natural gas, gold, silver, lumber, agricultural produce, and raw materials. Looking at a summary of results, you can see that PDBC has increased almost 28% year to date. I did not trade or generate cash flow from PDBC this week, but I may in the future. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow, that is, trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside Portfolio Cash Flow System is outperforming the S&P 500 Index ETF SPY. The Southside Portfolio is up 0.4% versus minus 14.66% down for SPY, a difference of 15.06%. The Southside is beating SPY by just over 15%. The cash flow generated by the Southside cash flow system for this week was 4.81% of the portfolio account value. The account value changed by 2.43%. Meanwhile, the S&P 500 ETF SPY changed by minus 3.99%. Bitcoin Watch, Bitcoin lost 2.58% this past week, and it continues to be in a bear market. It is down 70% from its all-time high achieved in November 2021. I sold option contracts on two positions this week, one call and one put that ranged from $76.01 to $100.01. You can get more details, including the total dollar amount of cash flow for the week, on the website southsideschoolofinancialfreedom.com. To increase your financial IQ and understanding of the stock market, please check out past videos for other questions of the week. The videos are organized in playlists. Levels 1, 2, and 3. Level 1 is for beginners. Level 2 is for intermediate. And level 3 is for more advanced investors and traders. The videos are also arranged in playlists by subject matter. In the meanwhile, please like, share, and subscribe.